Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are looking at the top 5 stocks that could double your money in 2022. And just to put this into perspective, when we compare doubling your money, which is a 100% increase from something like the S&P 500 or the overall stock market, which normally gives us an average return of about 10%, we are actually increasing that by around 10 times. So doubling your money in a single year is extremely impressive. So in this list, we're going to go in reverse order, starting at number 5, which is Open Door Technologies, ticker symbol OPEN. The current stock price for Open Door Technologies is $9.95. The low-end price target, according to analysts, is $8. The average price consensus among analysts is $23, so here we can easily double our money, and the high-end price prediction is $34, and these are all a 12-month stock price prediction, according to reputable analysts. If you didn't know, Open Door Technologies buys and sells homes. So basically, they were the ones that pioneered iBuying, which is where a company would offer you a cash offer for your house. They would buy the house and then they could flip the house for a profit. The reason why many investors are very bullish on Open Door Technologies is because real estate is one of the largest industries in the entire world, and people make loads of money off of it. However, iBuying has not been popular lately due to what has happened with Zillow, who has recently quit their iBuying program due to major losses that they have sustained. Luckily, Open Door Technologies is much better than Zillow in this particular regard, and we know this because in Q3 of 2021, they brought in revenues of $2.3 billion for the most recent quarter, and they only had net losses of $17 million. And this indicates that they are extremely close to actually being a profitable company. Now, what I like best about this company particularly is that currently the stock price trades for around a price to sales ratio of 0.5, which to me makes this a very attractive buying opportunity because the stock price has pulled back so much. While we go through these top 5 stocks, I also have a green check mark next to the companies that I would want to own in the future or that I own right now. However, only 2 of these 5 companies actually have this check mark next to them. So with that being said, let's move on to our number 4 spot, which is Skillz, ticker symbol SKLZ. Currently, the stock price trades for only $4.75. The low-end price target, according to analysts, is $11. The average 12-month price consensus among analysts is $15.83, and the high-end price prediction is $25. Skillz runs a competitive mobile gaming service, which puts people against each other where they can play games competitively to earn real money and actual prizes. Now, the reason why Skillz is on this list is because the stock price has dropped a whopping 86% from its highs. The reason for this is that Skillz is aggressively spending all of their money on marketing expenses so they can generate future sales. But with that being said, there is ample room for a recovery in Skillz stock. In early 2021, Skillz actually entered into an agreement with the NFL, which is the National Football League, and they struck a partnership to develop a challenge. It's a developer challenge, and the winning developer's game will be launched on the Skillz platform with the NFL marketing and supporting this particular endeavor. And after the Super Bowl, the sentiment around Skillz might change for the better because eventually their marketing campaign could pay off very exquisitely for the stock price and the overall company. This is a high growth company that is reinvesting the money back into themselves by marketing to a plethora of various people, and this could lead to higher revenues in the future. So they are taking a short-term hit to hopefully bolster long-term revenues. So investing in Skillz should only really be undertaken, in my opinion, by an aggressive growth investor. But I will leave that up to you to determine if Skillz is a good buying opportunity right now to at least double your money in a 12-month time span. Now we're going to move on to our number 3 spot, which has another check mark next to it, and this is the last check mark, and I really like this company. Digital Turbine, ticker symbol APPS, ticker name APPS, currently trades for $44 per share. The low-end analyst price target is $88. The average price consensus for the next 12 months for this particular company is $104 per share, and the high-end price target or price prediction, according to analysts, is $132. So we have a huge amount of upside here. Digital Turbine uses mobile phones, and they use it as a great advertising tool. They also charge companies for pre-installing apps onto new phones. For instance, when you buy a new phone and you boot it up for the first time, you will see that some apps are already installed on that particular device, and this is thanks to companies like Digital Turbine. So those apps actually pay companies like Digital Turbine to be installed on a phone before it was even sold yet. It's kind of the default apps that come with various phones. Digital Turbine has seen exquisite stock price appreciation, and the stock has been up over 8,000% over the last 5 years. They also have undergone a handful of various acquisitions that should bolster revenue, and on top of that, the reason why I personally like this company and why it has a green check mark next to it is because this company is profitable. It's turning nearly 20% of every dollar of revenue into free cash flow, which is fantastic news, and the stock could head back to its all-time highs, or at minimum double in its stock price, just because of how profitable this company already is. Normally, for really aggressive growth stocks, the companies that investors invest into are not profitable yet because they wait for the company to mature and they want their money to grow and mature with the company over time. This is why some investors like to invest into companies that have a PS ratio or a PE ratio of over 12. However, I like this company because this company is already profitable, it has already shown that it can be profitable, and it still is continuously scaling. So that's why it has a green check mark next to this particular company. Now in our number 2 spot, we have none other than Peloton Interactive. And this might be a surprising pick for some of you all, but please let me explain this investment analysis because the stock price has pulled back very aggressively. Currently, the Peloton PTON stock price trades for around $27.37. The low-end analyst price target is $24. The average price consensus for the stock is $48.27. However, the high-end price target, according to analysts, is $90 per share. The company's revenues have absolutely soared just in the past year and a half. However, unfortunately, the demand for their various exercise equipment has fallen, and this has then impacted their revenue growth and even some of their subscriptions, but we're going to talk more about that in the future, about the future growth trajectory of this company. Currently, the stock price, I find, is a pretty good value right now because it has fallen from its all-time highs of around $171 all the way down to a stock price below $30 per share. Now, I'm not saying that Peloton can reach its all-time high within this year, but I'm saying that the stock is trading at a substantial discount from what investors thought it was worth earlier in the year. Despite this major pullback, the company did have very impressive first quarter results for 2022. For instance, their subscriptions grew 87% year over year to around 2.49 million subscriptions, and this brought them ample revenue, which is something to be very bullish about. However, despite this, the stock price is still continuously falling. The stock price has declined so much, in fact, that Peloton's financials are actually rebounding and increasing faster than the stock price is falling. So fundamentally, the company is still pretty solid despite the beat down price of the current PTON stock. And that's why that Peloton is number 2 on this list. And I also want to say that the order of this list does not matter. Number 1 is not better than number 2 is not better than number 3, and number 3 is not better than number 5. These are not in any particular order. These are just 5 companies that I want to put on your radar for you to do more research on these companies to determine if these are good investments for you personally and your personal portfolio. But with that being said, in our number 1 spot, we have none other than AT&T, ticker symbol T. And of course, if you don't know, AT&T is a telecom giant. The current stock price trades for around $25 per share. The low-end price target, according to analysts, is $19. The average price consensus is $29, and the high-end price prediction is $41. The reason why AT&T is on this list right now is the stock price has actually recently dropped and has even gone lower than the stock price over the last 10 years. However, AT&T could double, according to this author, in 2022. It has tightened its focus, and it's actually sold off its entertainment and streaming holdings. It's also having a major spin-off of the remainder of its entertainment assets in the deal with Discovery, which should remove around $43 billion worth of debt off of AT&T's balance sheet sometime throughout the the year of 2022. So this should reassure investors that AT&T has not taken on too much debt, and because they previously have, they are making up for that by spinning off various deals and liquidating any assets that they don't want to focus on. The current stock price is trading at a slight premium because they have a price to earnings ratio, or PE ratio, or PE multiple of 8. However, if we compare this to the historical data of AT&T, this is actually pretty cheap compared to their formal historical average PE ratio of around 18. So technically, based off of historical values, AT&T is trading at a fantastic buying opportunity, and it's a great deal right now if you are following the PE ratio or the author of this particular article. But I want to hear your thoughts. What are your thoughts about these 5 companies? Comment down below your favorite. Remember to smash that like button for more videos like this one. Subscribe if you are new, and I'll see you in the next YT video.